Here we are for FOMC, and we actually did make a model here above the 1 minute 200 moving average, but it didn't do anything. I didn't get in. I went to go do my hair. Pretty nice, right? Thank you. I know. It's just my hair. I know. Thank you for everybody. I know it's just the hair, though. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. We're going to listen to Jerome Powell talk a bunch of smack cheesy, as he does every single time. This is one of his last times. He's probably mailing these in. He just doesn't care anymore. Bitcoin just took a massive dump to the downside. Let's take a look at FOMC and see what happened with the rate cut. It just came in on Wednesday, and here we are. Okay. FOMC Fed funds rate at 4%. Actual, they did not cut. Oh, no, they cut the rate. Yeah, they cut the rate. I knew they were going to cut the rate. I was about to say. Everybody knew they were cutting. Everybody knew they were cutting. It was forecast at 4. We got 4. We got it. We got it. All right. Now the next rate. Wait, hold on. Let's just double check here. Oh, wow. Hold on. No rate cut, right? No, yeah, we got a rate cut. Wait. Hold on here. It looks like they may have kept the rates flat, right? Which was bearish for Bitcoin. Bitcoin taking a beat down. My God. Let's take a look here. Yeah, it would say that they did not. I'm going to read that at 4 because we should be at, on October, we were at 373, 400 to 375. I'm confused right now. Hold on a second. Give the official. But I mean, it'd say they would have to cut the rate, but it looks like may not. Bitcoin kind of sitting sideways right now on the 1 minute time frame. And we're going to live trade this too as we watch Jerome Powell talk, right? Yes, they cut the interest rate. Of course they did. So we're looking at now a Fed rate cut in December. And 87% chance they go even further down to the downside, all right? So, and 12% chance they stay flat. But there's an 87% chance they cut the rate in December. So they cut the rates. We knew it was going to happen. It's kind of a nothing burger. It does nothing. We talked about this descending triangle falling down earlier today. Let me bring down that music. I don't know why I had it so dang loud. It should never be that loud. Anyway, so they cut the rate. I knew they cut the rate. It was a baked-in idea that they were going to cut the rate. No way they weren't going to cut the rate. It was just obvious because they kind of they got to do what they say they're going to do at this point. Otherwise, they get blamed for everything. They get blamed for everything anyway. You get what I'm saying? I don't know. They're never going to get to 2%, my whole point. He's just going to have to bail out and disappear into the sunset because it's never going to go the way he said it. And that's what they do with these agencies. They just change the face. Next person. Act like they don't have to sit behind anything they said, So right now I'm seeing a bit of a bullish move here. Let's take a look. Possible 1 hour tweezer bottom. That could push us back to the upside. If we can regain the 200 moving average on the 1 hour time frame, that is bullish. And the 1 minute. Attempted to regain the 200 moving average, made a dolphin dip, got back inside. If we can get the 1 minute above the 200, above the smooth moving average, we get ourselves a bit of a flag here. You may see me take a bit of a long. So Jerome Powell will come up. He's going to speak in 20 minutes. He's going to talk. We're going to listen to him talk like we do. And I'm going to live trade. All right. And that's kind of what we do every time. And we're going to see if there's something worth trading. If he talks and we get above the 200, we're going to take the trade. If he doesn't, then we're not going to take the trade, right? So live at 2:30 Eastern ET, we're going to have Jerome Powell. So get ready. Right now, this is a bearish sign. You kind of see like shoulder, head, right shoulder. Again, I feel like FOMC had nothing to do with today. It has everything and nothing. You know what I mean? It's kind of a nothing burger. Price action was doing its thing regardless. All right. So look, I mean, there's a bunch of liquidity above us now, all the way to 112,550, all the way to 120,550, excuse me, all the way up to 117.5. And there's no real red below us now, which is interesting. They cleared a lot. It looked like they cleared the weak hands. And we could start to reverse here. Let's take a look. Let's do our top-down analysis like we do while we wait this 20 minutes and just do what we do. Shout out to all the beautiful people here on the live. Are you here? I didn't even check to see how many people are here right now. Let me just double check. FOMC, baby. All right. And did we post this to the group? I don't know if we did. I don't think we did. No. So the whole group doesn't even know that I'm live yet, which is insane. 100,000 subscriber channel. Did everyone get the subscription that the notification that I'm live? Shout out to everybody here too. We're doing a cool thing for KKEX today. If you jump on it and hit the link, we have the pinned comment on KKEX. But if you do hit the link to KKEX, check this out today, right? If you watch FOMC with me, share 3,000 right away. So the first, I believe, 30 people to hit the link and sign up to KKEX, they'll get 100 USDT. It's that simple. You don't have to do anything but just to sign up to KKEX. So if you do that today, you get hooked up immediately, and they're going to give 3,000 USDT in bonuses immediately away to whoever, the first come, first serve. So if you like $100 for free, and you could trade FOMC for $100, you lose it, you lose it. You could turn that into winnings that you could have for the rest of your life. Hey, it's worth a shot. Hey, if you're learning, why not learn on someone else's dime? So hit the link below, or hit the link in the pinned comment, and find out more about KKEX. All right. So I'm going to delete all my old work. We're going to look at the top-down analysis for today and see kind of how things have shifted since this morning. Still inside this flag, right, or this falling wedge, rising wedge. Still top, bottom, still at the bottom. We expect to move back to the top of the channel. But like I say, it could also make a shoulder. Like we could see ourselves making a shoulder, a head, and a right shoulder that could dump us further to the downside. That's definitely a possibility. And then we have this resistance here at 119,528. And right here at about 115,000. That's a resistance. That's a resistance too as well. So, and then you have beautiful weekly support at $108,791, 109K. So there we go. So either if we lose 109, we drop back down to 100,000. If we regain 115, we pump up to 119. And anything else is range. You're between 108 and 115, really just sitting inside a $7,000 range. The 5-day, as we showed you, looks like a tweezer top. And I have shoulder, head, right shoulder vibes. The 3-day, shoulder, head, right shoulder vibes. I mean, it is what it is. And then the daily, shoulder, head, and right shoulder vibes, right? It looks like a head and shoulder beginning to dump in our face. A bunch of people are going to begin to short this now. They're going to enter here with stop losses above this area, and they're going to look to take profits into the 90s, into the $100,000 level, right? That's the next big trade you could make money on. You can see Bitcoin technically double top there at resistance on the daily at 115,300. Nothing wrong with getting into a short there with a stop loss up there. Just be okay with getting stopped out if it doesn't go your way. A lot of people aren't okay with it not going their way. If it doesn't go their way, they lose it all. You can't trade in a way where if you lose a trade, you lose every single part of the portfolio. That's just not the proper way to trade. that's not real life. Anyone that does that, that's like going all in on everything in life. It's like marrying the first girl you see. You know what I mean? That may be the best move ever. We don't know. But at the time, we don't have enough data on that, right? So Bitcoin looking more bearish than bullish. That's a right shoulder on the daily. FOMC acting like a nothing burger. And we're overbought here on the daily. And the stochastics want to come down. That's a right shoulder. And it looks bearish to me. We were looking to get the bounce earlier today, and we're still seeing if we could possibly get it. It would be something like this, and we would turn this into a consolidative ascending triangle. For the next 2 to 3 days, Bitcoin would bounce, right? And we would then consolidate and break out. This is what the bulls are looking for. Will the bulls get it? Only time will tell. We have to wait for it to play out. We continue to dump and make that right shoulder. This is right. And so right now, Bitcoin just continues to be more and more bearish. The more I look at it, it is what it is, right? And you can fake it if you want. Turn it into something bullish. If it bounces, it bounces. The 4 hour is very oversold. You would expect a bounce here right off support. You would expect a bounce here on the 4 hour time frame. Previous resistance, previous support, resistance, resistance. There's support there. We've been dumping now for a while. We've been dumping ever since Monday. Right? kind of got what you wanted. You'd think it would be time to make a bounce back to the upside. We attempted it in the 1 hour. We didn't hold. The stochastics finally reset and said we're done. No really strong bullish divergence. 50-minute attempted to get back up there, got rejected by 112,000 again. So we just got rejected by 112 about 20 minutes ago on a massive pump. And now here we stand, possible double bottom on the 5. And then there's the 1 with the moving averages. So, like, again, it's the same story. To be bullish, we have to break back above the 200 moving average on the 1 minute time frame. Anything else is folly, right? Bit of a cup and a handle there. Let's go. Definitely looks like the daily bottom, but no guarantees. I'd look for this to bounce to the upside. I'd look for the 1 minute to get back above the 200 moving average. And we're going to watch this as FOMC plays out and what he says. We're going to be watching the 1 minute. I'm going to have bookmap up on one side of the screen. I'm going to have the 1 minute up on the other side of the screen. I'm going to be smaller, and we're going to have Jerome Powell in the middle. In the middle. At 2:30 p.m. That's why when everyone goes live at 2, it's kind of pointless because he starts talking at 2:30. But everyone else goes live at 2, forcing me to fight the algo and also go live at 2. However, it can be very frustrating to go live at 2 because you sit, look, that's a live feed of Washington, D.C. I didn't realize that. Look, you can actually see the cars moving. Beautiful autumn day there, right? And do I miss it? No. Beautiful weather here in sunny Florida. It's gorgeous every day here now. In the high 70s, low 80s. Today is 80 and mostly sunny. I mean, who wouldn't want an 80 and mostly sunny day? For me, that is the bee's knees. Yeah. Tomorrow, 81. Thursday, 74, 73, 76. Weather goes nice and cool. 50 degrees at night. Ooh. And then it gets back into 84 and 68. So it's going to be in the high 70s at night and the low 60s. In the high 70s during the day and the low 60s at night. It's the most beautiful weather here on the Gulf Coast of Florida. You can't buy weather like this. You just can't. Palantir, what happened? It stayed up 142%. We kept a gain of $126 off of $298. If you put $300 in the trade, you would have made $424 on that trade, 142% on the regular stock market using 20x levy, and that is on BTCC, and BTC hooking it up too right now. They're hooking it up. So we will live trade KKEX today, too, to see if there's something brewing, to see if we can get paid here on that 1 minute. But it's going to be the 1 minute live trading. And what we want to see is we want to see us get back above this 200 moving average. We want to see this kind of form a falling wedge, breakout, cup and handle here. And then overall, I want to see this form like maybe a bigger channel that can break out. Just kind of building a few stories here so the narrative can set in on the TA. And we can build. But something like this is brewing here for Bitcoin. If we, we're fighting the daily bottom, and we put in a lot of effort there at 11,100. We just fought. We did dip down to 110.9. Ripped back up to 111.972. And now we're kind of just in the doldrums yet again. Just realized that's going to be the FOMC music in the background, which I'm going to mute for now because I don't know what that, what the rights on that is. Yeah. Jump into the chat in a second while I wait back to my music. It'll play in a second. And is this the right chat? Yeah, this is the chat from today. Jerome going to dump a stock market at all-time high. I think this was the chat from earlier. Yeah. Let me pop out the real chat. This is the chat from earlier today. NVIDIA partnered with Palantir. Lucky one. Interesting. I shorted Bitcoin under the 1 minute 200 moving average. Yikes. That might play out like now. Let's see. So far, that's good, but it's tempting to make that inverted head and shoulder. You see shoulder, head, right shoulder? Not saying it's going to do it for sure. Just, speculating. Smash the like mouse over the bookmap bubbles and use the scroll wheel. I'm working mouse over the bookmap bubbles and use the scroll wheel. What does that mean? What is he saying to people? Anyway, 111,000. This suggests that we do go back up. Bookmap now wants to go rip the shorts a new one after ripping the longs a new one. Bookmap suggests that we would dump. If you're in my trading group, let me show you. There's some key signals, but there's some times where I just show you what it is. And like if you look at this here, I mean, Bookmap says we dump at 913. And it says we're going down to 11,100. That's exactly where we went. That's where we went, right? 110.9. I mean, so Bookmap told you what to do, and then the 200 moving averages told you when to do it. It's really simple. Moves Bookmap and the moving averages. Yeah. I'm not zooming out, man. I'm all set. You can zoom in or out. It's up to you. Yeah. Please don't tell me how to use Bookmap. I appreciate you, though. I love you. I do. Yeah. Okay. Bless you. Thank you. Your Bookmap shows 4 seconds of time scale. Thank you. Appreciate you, man. Thank you. So look, we're looking at an inverted head and shoulder here on the 1 minute time frame. That could save the day here, get us back in good graces, and pump us up to the upside, right? Yeah. KSX just gives you $100. First 30 people get $100. So, it's basically a run to the frenzy, right? Whoever gets there first gets it. It's up to you. If you haven't signed up, sign up today, get $100. It's that simple. There's like no catch to it. It's really just first 30 people get it. Yep. It doesn't show on the link. Yeah. Sam on the live looking like a president. That's one sharp gentleman. Thank you. God bless you. My wife said the same. She was like, she wouldn't let me get in the studio, man. I told her, I said, you got the smoothest man this side of the Mississippi, baby. You know what I mean? Bang, bang, bang. That's how the man uses it, bro. Chill. Yeah, exactly. You got to keep it up with the beat, man. Come on, man. It is the 1 second chart, man. That's the point. You want to see price action every split second. That's what people love about it. It's like the fastest feed you can get on the internet right now. Nobody got the price better. I'm not liking this right now. As we approach FOMC. And I'll live trade on KKEX today during FOMC. If I see something worth it. It's looking like it's going to dump on your face now. On a head and shouldery. Stay with the big boys. Yeah, sign up with the on AM site, but don't see anything. I don't know what that means. You're the hardest working man in the game, Sam. God bless you, brother. Thank you. I just got a notification the Fed cut 20 basis points. Exactly. Yeah. Can you make Bookmap the 1 minute chart or the 5 minute or the 1 hour? I promise I'm not trying to tell you. I don't have no idea what you're doing, man. 1 second is like being in the ball replay. Sam, you look like DJT. Dump City, Bear City. You're still going for the president in the future, Sam. Hey, you never know. If I have to do what I have to do, I'll do whatever I have to do for the human race. If I have to become the president for the human race, I will do it. If that's what I got to do. I'm willing to to give myself up for the good of the people, man. I don't know if I would, a lot of pressure, a lot of ups and downs. Maybe I could do more for the world, but we'll see. Shout out to everybody here on the live. Thank you for being here. Yeah. The CME gap is pretty much filled. Yes, it is. Thank you for asking. Yeah. My dog literally took a dump. You guys. Oh my gosh, man. You're ridiculous, bro. And you know, Bookmaps now says we're going to go hunt the shorts up to 117.5. It's still there. We still have a bunch of liquidity. It doesn't mean it's not 100%. Right? You should replace Powell and give us insider info. I know, right? Actually, don't do it. You're too precious for us to lose, bro. Hey. Market makers that do shorts as they build their longs. Sam, today was my graduation day. God bless you, man. Happy graduation. From what, though? Who graduates in November? From what, man? Gotta use the link, and then when you do KYC, it says 24 hours of verified as he. I just did it. Interesting. Corny. Yeah. Hey, Sammy, love what you do every day. God bless. Would love your TA on pump. All right, we have a moment. We have about a few minutes. Let's do pump. Pump.fun, which actually had some movement recently. So let's talk about the storyline, right? Let's go over it all. So it comes out. Everyone FOMOs. You get it into penny. You rock it up to 6 cents. Some people sell. They make a 6x. It finds a nice bottom at 2.5 pennies, 2.6 of a cent there. And that's where it kind of does a double bottom and then takes off from 2 back to 9, does a 4x, a little over a 4x, right? Then retraces back to a Fibonacci, 886, 786, and kind of bounces. And now it's in this, like, I don't know, could it make another right shoulder? See shoulder, head. It might do something like this. Maybe it makes a right shoulder there, right, and breaks out. Right now it is breaking out, and you could say that it SR flipped that area, and it's got a resistance to get back above. It is the 3-day chart, not much to go on. 12 hours above the 200. 4 hours above the 4 hours attempting to get above the 200, and it's attempting to flag out. This looks bullish. I think you may have caught something here. You know, if Bitcoin reverses and we pump back to 112, 114, looks like pump's the first thing that's going to take that mission up. So I think you're onto something. And pump looks interesting. I would set alerts on pump.fun. I'm not a fan. I don't hold any. It doesn't matter to me what happens to this thing. Why can't I set alerts on my blue line? Why won't it let me set my alert? Weird. Maybe they're just alerts might be in, sometimes they're in maintenance right now. It's not letting me set an alert. I usually set an alert on the line. Right. I think, yeah, sometimes alerts are in maintenance, but I don't know what's going on. Huh. I would set an alert there if they let you. Oh, yeah, I think I'm in... Yes, exit, yeah. I've been in replay mode for too long here. There we go. I'll have to say, I must be in replay mode. So I would set alerts on pump.fun. It looks interesting. Jerome Powell about to take the stage, everybody. Let's get it together. Here he comes. In about a minute, let's take off the sound here. Let's get myself situated. I make myself really, really small. Or it could be really big, or really, really small, or really, really big, or really, really small. So funny, right? I like to keep Bookmap up here on the left so you can see what's happening on Le Bookmap. And here we go with Jerome Powell. Here he comes. Remember when he said, shut the effing door? That was insane, right? That's a true story. Like, that really happened. Funny. I mean, hilarious. Ooh. He's going to mail these in now that he knows he's canned. You know that, right?
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
2%. Yeah, right. Ha, ha,
Although
ha,
some
ha.
important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
Nice pump right there immediately.
Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending.
Who that's phone though?
Business investment
Who
in
that be on
equipment
the
and
phone, though?
intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests
me
that
typing.
both layoffs and
Don't be
hiring
upset.
remain low, and that both households' perceptions of job availability
That's it. I won't do it again.
and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months.
I took a shot on KCAX
Inflation has
here.
eased significantly from its
Getting
highs
above
in
the 200 moving average.
mid-2022,
Stop loss below the
but
previous
remains
low.
somewhat elevated relative
Entry right
to
now.
our
We'll see what we can get up
2%
to
longer run
112,
goal.
441.
Estimates based on the consumer price index
Live trade here on
suggest that
KCAX.
total PCE prices
Jump on
rose
in today, get 100
2.8%
bits.
over the 12 months ending in September.
This is the 1 minute here on the right. We're tracking
Excluding
Bitcoin
the
as it
volatile
breaks
food
up.
and energy categories, core PCE prices rose 2.8% as well.
Thank you so much for the super chat.
These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived.
We're up in the
a
long,
one-time shift
getting the pump,
in the
baby.
price level. But it is also possible that the
I'm
inflationary
the king of
effects
3% right
could
now.
instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become
Oh,
an
nice
ongoing
pump to the
inflation
upside for
problem.
Bitcoin. Inverted head and shoulder
In
to the
near
upside.
term, risks to inflation are tilted to the upside.
That shoulder,
and
head,
risks
right
to
shoulder.
employment to the downside.
Adam and Eve cup and handle.
A
Adam and Eve
challenging
double bottom there.
situation.
The entry was
There is
beautiful.
no risk-free path for
That entry was
policy as we
beautiful.
navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in
It is the
promoting
1 minute.
both
Don't get too
sides
excited.
of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another
Your
step
son has a great
toward
name.
more neutral policy stance.
He's a good man.
With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks.
Whoa, they just
continue to face
flopped
two-sided
that thing.
risks.
Oh, my God.
In the committee's discussions
Never trade
at this
FOMC.
meeting, there were strongly differing
That was
views
crazy what
about
just
how to
happened. I looked to
proceed
the
in
right, and it
December.
was the nastiest red candle I've ever seen.
A further reduction in the policy rate
Look at
at the
that.
December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Yes, that was bearish. Yikes.
At today's meeting, the committee also
Look at
decided
this.
to conclude the reduction of our aggregate
Oh, my
securities holdings.
God.
as of
That's
December
going all the
1.
way to 109.2 in 2
Our
seconds.
long-stated plan has been
My
to stop balance
goodness.
sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions.
ETH just hit 3,900.
Signs have clearly emerged
Losing
that we have
4,000.
reached that standard. In money markets, repo rates have moved up relative to our administered rates.
They went after
and we have
anyone who
seen
just
more
longed
notable
FOMC.
pressures
They
on
was like, "Well,
selected
we're gonna
dates,
get you."
along with more use of our standing repo
That was
facility.
nasty. I lost $100.
In addition, the effective federal funds rate has
Thank
begun
goodness.
to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff.
That was crazy.
Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion.
$2 trillion
As a
they're
share of
holding in
nominal
securities.
GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
That's it, huh?
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your
Wow,
next
110. Just look at this dumpage.
Well, as I just mentioned,
FOMC
a
dumpage.
further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our 2 goals, we have, strong views across the committee. And as I
Dumping
mentioned,
this thing.
there were strongly differing views today. And
It had to make
the
a flag
takeaway
above
from
the
that
200
is
for me
that
to
we
think
have made a
anything was
decision about
possible.
December.
Front-randed just for
And, we're going to be looking
fun
at the data
there,
that
but
we
no,
have,
we got no love.
how that affects the outlook and the
now
balance of
110
risks.
is
And
barely holding.
I'll just say
109.950. Now here comes the initial dump. Where are we going?
Last month and maybe today, I won't put words in your mouth, there's a risk management exercise.
Well, when
At
the
what
1 hour
point do
loses
you,
the 200.
conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last
The
year?
daily's coming for the
where
200
you made a
now.
sequence of adjustments and then waited to
And that's the
gather
right
more
shoulder,
information?
everyone. Like,
So the way we have been thinking, way I've been thinking about it is the risks to the 2 goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw,
You lose the 200 moving
particularly
average,
after
I'm
we
a bear
saw
again. You
at
know
the
that
July
about me.
meeting, we saw the downward revisions
A
in
hard
job
bear.
creation. We saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. if the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one
You
of them's
lose the
calling for
200
you to cut.
on the daily,
So
you
if
come to
that-
106.
that
You
got
lose
back
106,
into
102,
balance,
then 91.
You
I
want
mean,
to be roughly at neutral.
it could be a
So in
fast
that
move.
sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation.
Still saying there's an 83% chance we get the
People have
cut.
different forecasts.
I think
right?
people are
So
getting a little too
they'll-
crazy right now
they'll
over this
they'll
information,
feel-
you know?
They'll
Well,
forecast
1096,
faster
it
or
was a
slower
beatdown.
progress on one or the other.
Bitcoin
And they also
just took
have
a
different
basically
levels of risk
$2,000
aversion.
dump.
And people, some will be more averse to inflation overruns, and some will be more averse to underruns of
So I think it
employment.
was a descending
And so
triangle there,
you put
see
that
it?
together, and as you can see from the SEP and
Well,
from
even
the
bearish
public
all
discussion
day.
that goes on between the meetings when more
This
participants
is a
go out
meltdown.
and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting. As I
The daily
pointed out
coming
in
to
my
challenge the
remarks.
200 moving
And
average,
that's
making a
what leads
right
me to say
shoulder.
that,
I mean,
that we haven't made a decision
Yikes.
about December. I always say that it's a fact that we don't make decisions in advance. But I'm saying something in addition here.
1095 going to
That
attempt
it's
to
not-
bottom, but
it's not to be
it's-
seen as a foregone conclusion.
I
In
don't
fact,
see
far
it.
from it.
As I said before, I just
Can I
never
ask a
saw it.
quick
We had to
follow-up
get
on
back above
QT? How much
a
of the
5-minute 200.
the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
Colby Smith.
Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings And we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market. And, you know, the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So, you know, we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents.
Bounced there off 109,000.
That was a
236.
strong, solid vote in favor.
Back above 110.
The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions.
Yeah, we're right on that daily 200 moving
average. That's
average.
the direction of things.
John L.
Place I'd like to get in, but it's also sketchy.
Janelle Marte with
Gotta hold that
Bloomberg.
200.
How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept.
Bitcoin already bounced back $1,000.
Now it's been doing that for some time.
110,006 on the move.
That leaves the biggest category is services other than housing services, and that's kind of been moving sideways.
S&P pumping
over the last few months, but
Just
a
keep
significant
printing, man.
part of that is non-market services, and we don't take a lot of signal about the tightness of the economy
We
from
might get
that.
some
So
longs.
if you
We
add
might
all
be able
that
to trade
up,
long all night
a
tonight.
couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what
Sure.
that is, but it might
Sure.
be,
Sure.
5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4
Guy's no
in that
idea what
range,
he's talking about.
something like that. So that's not so far from your goal.
Pointless.
So that we look at that, and the
Yada,
thing about
yada,
tariff inflation
yada.
is the base case is that it will come.
Send this to the aliens
And
to show us how dumb we are.
It probably will increase further, but it is that it will be a one-time increase. And, we've been very focused for all of this
My
year
dog
and
sounds
making sure that that's the
better.
case, and thinking carefully about what are the pathways through which it could become something else, troublesome
Seriously.
inflation. One of those would be
Word salad.
a
Him
really
and Kamala
tight
Harris
labor
can go
market.
at it.
We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the
Well,
part of services inflation
know-
that isn't coming down as we would like it to is the non-market part of
Mind-numbing word
of,
salad. You said it, baby.
non-housing services. And, overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. And so that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term
never gonna happen,
surveys
never
or
gonna
market
get it.
pricing, you will see that.
Oh, back to
that's a
111,000.
credible commitment.
Unreal.
And there should be no question.
Right back to where we
that's
started a
where
second
we're
ago.
going.
That was insane. They just went off all the longs. Oh my gosh,
Great, thank
the
you.
longs
Chris
got
Rugaber, Associated Press. So there's a big
Glad I
investment
only lost
boom
100
in AI
days.
infrastructure right now, as you know, and
Chris Rugaber.
wondering if the existence of such a
Rugaber,
boom
Rugaber.
would indicate that rates are not that restrictive after all. And could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking
Of
about
course, they're going to create market bubbles. That's what they do.
So I don't
So they
think
can crash the
that
market. What he thinks doesn't
You're
matter.
right. There are a lot of data centers being built and other investments being made around the country and around the world. And big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially
Watch this thing drip to
interest-sensitive.
117.
It's based on longer run. It's
Tonight.
longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. Could you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's
So
out there.
loud,
Can you
so sorry.
give us a sense of what you're
Jeez.
looking at to track inflation in
lower
the
that?
absence of
My
government data?
goodness.
Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many.
Back to 111,000.
Many different sources, and
What
again,
a move.
including what we
$2,000
get out of
move in
of
seconds.
The beige book,
Crazy.
which will be sort of
5-10 minutes,
come out
$2,000
mid-cycle,
move for
as
Bitcoin.
always.
Now it's battling the 200
And
moving
it
average in the 1
doesn't
minute.
replace
Has to get back above.
the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, it's coming from Amazon and others, wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. And yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or a similar thing. We are. If you listen to the earnings calls or the reports of, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products. but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December,
Oh no, you're not going to get a
foregone
real
conclusion,
answer, brother.
What other things could be the concern then?
Well, perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above
First
the median
30 people
number
to sign
for
up
the
to
committee,
KKX
but I
today
think there
are
people on
going
the
to get
committee
hooked
who
up.
have higher estimates of the
There's
neutral
it right
rate, and
there,
that's you can
3,000
argue
to the
his position
community,
since it can't be
Crypto Lifer
directly
and
observed,
KSX.
the neutral rate.
Hit the link at the top
I
to get
think
that $100.
for-
First
for-
30 people get
for
hooked up.
some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether, in fact, the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then, you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risks?
You're not going to get a real answer, bro.
deeper
Stop asking
philosophy
real questions,
division
man.
of
And just
work?
go along with the flow, bro.
Everybody on the committee is
not gonna
deeply
answer you.
committed to doing the right thing to achieve our goals, maximum employment and
But
stable
what is
prices.
that?
You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different
you
risk
each
aversions to
have
the
different-
different variables, which
Wait,
is
so you each have different opinions and each have different forecasts. Then how do you even come together and figure it out?
people just have different risk tolerances.
Look at
let's
this
say.
guy looking
So
at him. He's like,
that leads you to
"You're
people
not
with disparate
answering
views.
anything
You will
I'm
know that
asking you."
from
He's staring at him.
speeches you've been listening to from my colleagues.
Well, we got to
And,
make that dude a
and so
meme
we're
right
in a place
now.
now where we have in fact cut 2 more times.
We got to make that a
And
meme.
we're 150 basis points closer to
I
neutral.
got to go
where,
back to his face right there.
for
When he
some
and then we'll go
forward.
back.
So what's more important in
Look.
this division? Is it inflation risks? Is it employment?
He did when they
seen it
I
in
wish I got to
the,
go back. I'll get it
the
later.
September Summer of Economic
Someone go get
Projections.
that. That
You've
was
seen
so
this
fun.
in
When he
the
looks at him, he's
public
like,
remarks of
answer me,
FOMC
like,
participants.
answer the
and
thing I
now I'm
asked
telling
you.
That's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Thank you so much. Liz Schulze with ABC News. What is your explanation
Fake
for
news.
why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and
It's
one of them is
tariffs.
just a
Tariffs.
dramatic reduction in the supply of new workers. And that's 2 things. That's
lack of
declining
immigration.
labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job
Yeah, tell me,
creation,
Jerome,
if you
tell
adjust
me.
for likely overcounting in the way that BLS does its work is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue,
I see that flag off the
that
21.
there is an effect from demand,
Pump
and that we should use our
to
tools to support the labor market when we see this
112,867 would be a nice move for Bitcoin.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think, some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate.
That's breaking out.
We don't set asset prices. Markets do that.
Well, you must be well aware
Sure you don't.
that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale
100%.
for thousands of job
What a point-
cuts
what a
that
point-
have been
what a good
announced in
point.
the last few weeks.
Yeah, I don't think
You
interest
give us
rates
cheap
are
money.
an important part of the AI, of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis
This little
point
flag's
hike is
pumping.
going to be a dispositive
That's starting
thing,
to
but
become the
ultimately,
sauce there. That's the flag above the 200.
lower rates will support more demand, and that'll support hiring over time.
Pump
And
to
of course,
112,
we
800
also
faster
have
than you
to
think.
Be careful about this.
And then we go
which
from
is what we've been
1.9
doing
to
because
112. I mean, that's
we know where
volatility.
inflation is, and we know that, I've told you
No,
the
you don't.
story.
You
It's a
don't know.
complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of
She's
the
cool.
economic growth
I like
that we've
this
been
chick.
seeing is fed by investments in AI.
She just looks smart.
So how worried are you about
I put her
what
on my,
a sudden contraction in
my
tech
think
investment
tank,
would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might
This girl's
approach
smart,
what's
man. Her
happening right
parents
now?
are smart. You could tell this girl
Yeah,
comes from
this is
intelligence.
different.
There's something about this girl.
In the
I
sense
pick her out of all the
these
other people.
companies-
There's something about her,
The companies that are
man.
so highly valued actually
Like,
have
I'd-
earnings and
I'd like
stuff
to interview
that.
her
So
for my-
you go back
my
to
team,
the
you
90s
know?
and the dot-com. These were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end
110.9 is up
consumers,
now.
or maybe skewed that
Said
way.
it could go to
But the consumer
112.8.
is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped.
The daily bounce
very,
right
very
off the 200
sharply
moving average.
due to mainly immigration, but also lower
Amazing.
labor force participation. So, and that
If
means
you're just jumping on in,
there's
we're doing
less need
KCAX
for new
$3,000
jobs
if you jump
because
into
there's-
KCAX.
There isn't this flow.
We're giving $3,000 away to the
into
first 30
into
people.
the
Each
pool
person,
of
I believe,
labor
gets
that,
100
where
USDT in bonus.
People need jobs because there aren't
Just the
those
first 30
now.
people
So
that
there's
hit
not
that link and
a
then
supply
sign
of
up today.
workers showing up for jobs.
That's it.
In
No
addition,
catch.
demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down in a. Others may argue, I'm not sure where this argument will come, but you're perfectly right, that you could also argue, well, things haven't really changed, but you might not know that, so I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting, we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago, you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge,
Basel.
has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that,
it's an ascending triangle there, touching the 21 above the 200. We could get a pump here for Bitcoin to 113.6.
Various mechanisms, but.
And then look, we got liquidity above us all the way back to 117.5. This could be a massive short squeeze
really
here.
Just getting going.
We don't know.
Come to the point where they're, where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian. Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at
blame it on the rain.
Unemployment insurance claims, initial claims, are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. we're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Wow, they're going hard today.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what
He's
comes.
never gonna
And
answer
what
that,
comes
like,
right now is
so funny,
a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have
the market is just
upside risks to
all over the
inflation,
place.
downside risks to
110.9,
employment,
111,000.
and this is a very difficult thing for a central
Look at the
bank
volatility
because,
today. It's insane.
One of those calls for rates to be lower. One calls for rates to be higher. We can't.
They're
do
going to
both.
keep printing
So
money,
we have
everybody.
to
Don't
balance
stress.
the two.
Bitcoin will go
So
up in value
it's a
over
challenging
time. I'm not a
thing,
financial advisor, but come on now. In 5
as
years from
we
now,
have worked
Bitcoin
our
will
way
be
through
higher than
this
it is
process,
today. These are steals.
You would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have.
The
That
coach,
makes a
you
lot
got
of
it.
sense. All of these people are, people who take their jobs very seriously, work very hard.
That's
at
when it's
this.
like, yo, you're not
They just wanna
answering me
do
at
what's
all.
right for the American people, but they have different views on what that is. And, it's an honor to work on people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of
I
the
gotta
right thing
meme
so
that
far
dude,
this year. I
man.
think
That's a
it
meme
was
right
appropriate
there.
for us to be careful
That's a
about this.
Jerome Powell
I think
meme.
it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we wind up resuming rate cuts at some point,
I want to see this break out, man. A pump to 113.6.
I think we're trying to get
back
to
to
the
where
end
we
of this
started the
cycle
day when it
with
all
the labor market
began.
in a
Like,
good
isn't that
place
crazy?
And with inflation,
where the morning
on
began.
its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question. Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or
Wow.
the outlook for the economy. Is it a warning?
She calls someone that owes money a
So,
cockroach?
we're obviously we watch these things very carefully. Credit conditions.
How dare
very
you.
Carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit. Institutions having significant losses.
I'm
and
not
some of
making
those
fun of the
losses are now
dude.
showing up on the
I'm not
books
making
of
fun of
banks.
anyone. He's saying, dude,
we're-
what is
we're
going
looking
on?
at it
I'm on his
carefully. We're
side.
paying close
I'm not making fun of
attention.
him. I'm on his side.
I
What
don't
are you
see
talking
at
about?
this point
Freaking
a
weirdo.
broader credit
I'm saying,
issue.
dude,
It doesn't seem to
he's
be
not getting the answer he
something
deserves. Like, I'd be looking just like him. I'd be like, dude, what are you
very
saying to
broad
me?
application across
He's
financial
right, bro. It's a joke, the fact that
But,
Jerome doesn't
you
say
know, we're gonna
he doesn't
be-
answer any
we're gonna be
questions,
monitoring
man.
this
That dude
quite
answered.
carefully
That dude
and,
asked
and
real
making
questions,
sure
did
that
not
that
get
is
real
the case.
answers. That's why
And
he
then
looked like
separately,
that. Get with the
many
program, bro.
yourself have said
We're not
that
making
we're
fun
in
of
a
anybody.
bifurcated economy right now with
You're looking
high
at
net
it
worth
like a
individuals
strange, sensitive
continuing to
being.
spend with the lower income pulling
I
back.
can't be around people that
How
are that
much of
sensitive. I really
consumer
can't.
spending continuing
My dad made me tough.
hinges on the stock market
Get tough or
remaining
get
strong.
lost.
In some odd way, does the market help
Thank you
keep the economy
for this
buoyant?
message.
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market it would affect spending if the stock market went down, but it wouldn't drop. It wouldn't drop sharply unless there were quite a sharp drop in the in the stock market.
Hey, Perry, you guys are
People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor.
My boy owes me
supporting
money. He definitely
consumption
can you.
right now. But and you would see it if you saw a material correction in spending But it wouldn't be, you shouldn't think that it'll, dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
That's it, dude. That's it. And we sit here in this flag. Let's do our last assessment. Basically a nothing burger, but they started off very bearish. We're not going to cut rates at the end. We may cut rates. We're not sure. You know what I mean? It started off somewhat bearish, and that's what gave that nasty dump. Then they came back bullish and started saying, well, no, not so much. We're not going to be that bearish. And then people started, oh. And it just got to wreck every long real quick, all the way down to 109.2, all the way back to 111, and now we sit inside this flag that could pump you to 113,600 if Bitcoin can hold above the lows here. Interesting. You got two areas here, like an entry there with maybe a stop below 110.3. Could produce a gain to 113.6. I would watch this flag. Like this, I give it about an hour to two for this to kind of fall over. Then we reassess the market one more time. But, after the dumpage like that in the reversal, you would expect continuation to the upside, right? Why didn't we continue dumping? To me, that's a little bullish. So it looked horrible. I can't believe we made it back as fast as we did. I thought that was going to just continue down to 106 and call it a day. We reversed quickly, got back inside the pattern. Now we got to make sure that we get back above that resistance. It's actually key you get back above 112,000 and that level right there at 111,450. All right. I say because we're dumping before the FOMC, we're likely to do well during and after the meeting. We're sitting at good prices, people. We're all right. We're in a good spot. If you survived, congratulations. I lost $100. FOMC, we're okay. We're okay. We're doing all right. It could have been way worse. And it was heavily volatile. A lot of people just got absolutely liquidated. Remember that a lot of people lost their whole account right there, got absolutely liquidated, got their butts handed to them and lost tons of money. So if you lost a tiny bit, if you basically went with your proper risk management or you made money, you're in the top percentage of people here. Most people, remember, are getting rocked and wrecked every single time. I love you all. God bless you, Samly. The monthly is 3 days to get back, or we are, the daily's back above the 3-day, though, above the 200 moving average. That's all that matters to me, right? Someone said I'm missing a Casper breakout. Yeah, nice little pump there out the flag at 5 cents to 6 cents. I'm with you on that. And if Casper can stay above this 200, you kind of, let's say it's in this pattern. Felt like it broke back inside after losing it, and you got to get that move back up. Casper's got to start getting back into that 7-8 cent region, at least to 6 cents. Look for it to pump. I don't know. I'm done trading Casper, but yeah. I made 4K. That's amazing. Unreal. I'm in USD, so I'm chilling. Awesome. Yeah, I made $2. Hey, I lost $20. Unfortunately, I saw some people make 14K. Some people made 2K. I'm looking for us to get back above the 200 moving average on the 1 minute time frame before I really start going long, right? I'm looking for my signal. We almost got it there. I traded it first here in the morning, got the pump, it rejected. And I told you, I'm going to wait till I see my model. And now my model is starting to form here, and we just need to get tighter. And there's a chance we do break up to a 13.6, or we come back for that double bottom at 109.3. So it's sketchy. Watch the 1 minute time frame, see how this flag plays out, and then I'll update you guys in about a half an hour to 40 minutes in the trading group. Everyone, I love you. Thank you so much. I'll see you on the next live stream. May God bless each and every one of you. Thank you so much for jumping on in, and I'll catch you on the next live stream. Please comment, like, and subscribe. Crypto Lifers for life.